And all it takes for gold is to break through this $2,070 level. I think that's what really is the most important question for gold. When will this happen? Will it happen now in the next few months, or will it take maybe another half a year or a year of consolidation? But overall, that's, I believe, what's going to happen and what will catapult gold much higher in the mid to the longer term, let's say over the next 2 to 3 years. Because once you break out of this resistance level, sky is the limit. I think $2,500 will be seen very quickly. And then over the following 2-3 years, we could easily go to $3,500, $5,000. It's all possible because this formation here has been 12 years in the making. There's been a lot of energy being compressed.
Wednesday saw a decline in gold prices pulled down by a rise in the dollar and U.S. Treasury yields as minutes from the Federal Reserve's June policy meeting confirmed predictions that rates will remain higher for longer. As of 2:32 p.m. Eastern Daylight Time, 18:32 GMT, spot gold was down 0.5%, trading at $1,916.49 per ounce. At $1,927.10, U.S. gold futures closed with a 0.1% loss. According to meeting minutes made public on Wednesday, the United Fed decided to keep interest rates unchanged at its June meeting, despite the fact that the clear majority of participants thought they would eventually need to tighten policy even further. Following the announcement, benchmark U.S. 10-year Treasury rates spiked to a nearly 4-month high, while the dollar gained 0.3% against a basket of foreign currencies. Following last month's halt, traders are estimating that the Fed will increase interest rates by 25 basis points in July, with an 89% probability. According to Florian Grummes, managing director at Midas Touch Consulting and Persimi FedWatch tool, gold has been consolidating in some way since 2011. According to Grummes, who recently spoke in an interview, gold is poised for a spectacular breakout but must first overcome this technical level. Moreover, he talks about the Federal Reserve's change of course, the value of the dollar, and what to anticipate from rate increases. Please like, subscribe, and leave your thoughts in the section below as we move through the video.
And gold went up massively from 2001 until 2011. 10-year bull market, it went up 670%. And so you can see that it's not what they tell you nowadays, that gold is going nowhere. I mean, gold can make big moves and has done so in the past. Of course, and that is a very important top here, the red arrow. This is the top in 2011. This is now 12 years ago, 1920, and that's exactly where we are trading right now. That's been the top in 2011 after a 10-year bull market. And if something goes up so steeply, it has to recover, it has to digest, it has to consolidate. And that's what happened. And gold went down nearly 45% over the following 4.5 years, only to reach a bottom here at 1,045 in December 2015. So this is 7 years ago. That was your last best buying opportunity in the gold market. And since then, gold recovered and has reached, again, a new all-time high, 2017. This is 3 years ago. And as you can see, it's been running against this 2070 dollar mark, resistance mark now for the third time, just recently in early May this year. So this is just 2 months ago. Gold reached $2,070 again, and it failed. It came back down, and that's exactly the correction that happened that you just described, and that took gold back down to 1920. So this is the very big picture. I believe that since 2011, over the last 12 years, gold is in some form of a consolidation pattern. And if we're going to zoom in a little bit further, and that's the weekly chart, so you're going to have the top in 2011 here on the left side at $1,920. You have the low at $1,045. This was December 2015. And you have the top in summer of 2020, a few months after the Corona crash happened and the central banks flooded the market with money. Gold went up to $2,075, reaching a new all-time high. And since then, again, it's correcting and consolidating. We had another run during the Russian invasion. It went to 2070, and then last year we had this steep pullback. when the central banks started raising rates in America. And now just recently gold is back up at this 2070 resistance. So what I want to tell you on this chart, we are most likely seeing a so-called cup and handle formation. And all it takes for gold is to break through this $2,070 level. I think that's what really is the most important question for gold. When will this happen? Will it happen now in the next few months, or will it take maybe another half a year or a year of consolidation? But overall, that's, I believe, what's going to happen and what will catapult gold much higher in the mid to the longer term, let's say over the next 2 to 3 years. Because once you break out of this resistance level, sky is the limit. I think $2,500 will be seen very quickly. And then over the following 2-3 years, we could easily go to $3,500, $5,000. It's all possible because this formation here has been 12 years in the making. There's been a lot of energy being compressed. And as you can see also on the left side, the top from 2011 is more or less in the same region where we have this resistance now at 2070. So I think it's a very big consolidation pattern in the gold market that is about to end, and it could end now in the next 2-3 months. Maybe it takes another round of consolidation. Maybe gold wants to really shake off all the weak hands in the next few weeks, and maybe with those 1 or 2 levels lower, maybe 1850. I don't think it will go much lower than 1800. That's really my worst case nowadays. But that's the big picture in gold. Remember that since the end of the gold standard in 1971, this currency system is backed by nothing than the faith of the people and the force of the state. And now it takes much more than the last time to rescue the system. As I just explained, over the weekend, they decided 400 billion in rescue packages very quickly. And the next time they will have to come up with even more, because this is a fiat system backed by nothing. And it will repeat itself again and again and again. The only question is how long it takes. And of course, the dollar is a very big and the most established currency system over the last 50 to 80 years. So it might take much longer than in a small country like Venezuela or Zimbabwe. But in the end of the day, it all depends on psychology. And it's just a question of perception. And as you've realized over the last few months, the de-dollarization topic popped up rather violently, and lots of people discussed it. Yeah. And I think it's obvious that we have a break between the East and the West. There's a new Cold War already going on. And the BRICS countries trying to move away from the dollar. And I think things are accelerating, but it's a process that might take the next 10 years. Right now, obviously, we are in a seasonally a little bit challenging period the next 2-3 months. Usually the stock market can have some problems towards and into September. And we have a very sharp rally over the last few months, so I wouldn't be surprised to see some weaknesses and pullbacks. It's certainly not a good time to step into the stock market right now. However, I think once we have the slightest problems in the market again, you will see the Fed being forced to come up with the next rescue package rather very quickly. So I don't think that we're going to see a longer kind of like correction or bear market like that could last another 1, 2, 3 years. It could be a matter of a few weeks, maybe 1, 2, 3 months, pullbacks, yes, but not something much longer, because it will actually risk that the system is completely imploding, and the Fed will not be willing to accept that. I think that they have stopped. If they would break another 1 or 2 times, okay, I don't think it makes a big difference, because we're already at 5% and higher, so the large chunk of it has been done. I personally think they have stopped already. And I think that rather sooner than later, probably, let's say, towards end of the 3rd, 4th quarter, they will be forced to cut rates again. We're going to see, and that's, by the way, part of the crack open, right? I mean, this is a beautiful way to explain that on the one hand, you have rising stock markets, while the real activity or the activity in the real economy is actually not really that good like you would think if you look at the stock market. So you're going to see more and more problems cracking up in the real economy. over the next few months, I guess. And at some point, then the Fed will be forced to lower rates again. Banks that have been failing in March, but it's also Vice Media, if you remember, they went bust. And overall, it's this number has doubled in compared to the same period of last year, and it's the highest number of fillings since 2010. So there is something brewing which you don't really see in the news, and which also is not shown by the stock market data. By the way, I mean, one thing we also have to mention about the rally in the stock market, it's not a very broad rally, right? It's focused on a few selected stocks and on the AI boom. Most of the other stocks have gone nowhere or lower. So it's not a very healthy market in general.
What do you think the gold will bring? Please let us know the price in the comments section below. Don't forget to subscribe, like, and turn on your alerts after watching this video. Thank you for watching.